Hello, everybody. Welcome to the Trading with Ashley show. I know the markets are scary right now. It has been a rough couple of days, a rough couple of weeks, actually. And we've seen the market go down only to go further down. So if you're buying the dip and it just keeps dipping, that can be pretty frustrating. And you're wanting to know, well, can it go lower? So there really is a line in the sand that I am looking at, and I wanted to share my thoughts with all of you and show you exactly what to look for in the coming days so that you can make the best trading decisions for yourself. But first, let's take a quick listen to all the tariff talk and how it could affect you and how it could affect the market.
Today, several of our largest trading partners responding to President Trump's new tariffs. Canadian Prime Minister Trudeau today responding with a 25% tariff of his own.
Canadians are reasonable, and we are polite, but we will not back down from a fight.
Mexico's president this morning saying she plans to talk to President Trump this week.
A México se le respeta.
If they can't reach an agreement, Mexico will impose tariffs on U.S. goods by this Sunday. The new U.S. tariffs went into effect at midnight, a 25% tax on all goods coming across the border from Mexico and Canada, and an additional 10% tax on Chinese products, which now makes it 20%. U.S. farmers could soon feel the pinch after China announced overnight it will impose additional tariffs of up to 15% on U.S. exports coming into China. The CEO of Target today warned American consumers will likely see higher prices on produce in the next few days.
We get a lot of fresh vegetables from Mexico, for example. I'd expect to see price increases there quickly.
The auto industry is also expected to take a hit, with the average new car cost increasing by over $3,000, according to research from J.P. Morgan.
So what they have to do is build their car plants, frankly, and other things in the United States.
The president claims Canada and Mexico aren't doing enough to stop illegal immigration and fentanyl shipments. President Trump is expected to address the tariffs in his speech before Congress tonight. He says the U.S. is getting ripped off by bad trade deals that cost American jobs.
Now, before we get into the details of what I want to show you, let's take a quick look at the Fear and Greed Index. For those of you that are interested, you can look at this for yourself at any given time. You just go to CNN Fear and Greed Index. And I even have an app on my phone that shows me this. But right now, obviously, we are in extreme fear. So for those of you that are not familiar with this index, they actually pull investors along the way to get this number. And we have found that when we are in extreme fear, it's typically the time to start to buy your stocks. Then when we are in extreme greed, this is the time to cash up. So this will help you. And I think you've heard the saying that buy when there's blood in the streets. Well, this is the blood in the streets right here. So this might help you. 20 is really low. We haven't seen this in quite some time. And so the fact that we're at 20, I mean, we could go all the way down. Obviously, it could go lower. But if you are buying stocks when we're anywhere from 0 to 25, then a year from now, you should be sitting pretty as long as it is a good quality company. For those of you that have been with me for a while, you know that I am usually a buyer when we are in extreme fear like we are now. It's the best place to start to establish a position. And quite frankly, it's a lot safer than when we are in greed or extreme greed, because that which goes up must eventually come down. And once buyers decide to step in, things can change pretty fast. So there's nothing wrong with starting to establish your position at this point in the market when we are in extreme greed. It may be the beginning of extreme greed. We could go down further. We could stay down longer. But if you are starting to establish your positions now, you know that at one day in the future, if it's a quality company, you should start seeing green. Now, let me take you into the technical analysis for the SPY itself, and let's take a look at what you should be watching for the remainder of this month. Now, this is something I showed my students today as we were looking at this together. Here's what I'm looking at. I want you to notice that the 200-day moving average is at 571, and we actually had gotten much lower and closer to it today. Right now, it's sitting right above it. It actually got this close and then it bounced. But I want you to realize how important this moving average is. It's looking at the last 200 days of market action, and once you go below that, spot. Usually there's further to fall if you don't rebound in short order. In fact, the last time that we were at the 200-day moving average and actually went below it was back in October of 2023. Let me show you. If you can see right here in October 20th of 2023, we came below that 200-day moving average. We continued below the moving average all the way up till November the 1st. So it was over a week that we traded below that, and that's a very scary time. And then everyone got their act together and they realized that everything was on sale and they started trading above it. And those of you that were trading in October of 2023, you'll remember this moment. I know I personally bought several stocks at this level and I'm still enjoying the benefits I'm seeing to that today. Now, if we were to go below it, no one knows exactly how long we'll stay underneath it. But I can promise you one thing, you're going to see the fear and greed go up even more if we are below this level of the 200-day moving average. And as we saw from last time, I mean, you're looking at maybe a couple of weeks and it could be longer, but you might want to go ahead and set your buy orders on your favorite stocks. Study their 200-day moving averages and see where it might be a bargain price to shoot below that to start to establish your position. If you are to do that, I think a year from now, no matter what you buy, as long as it's a quality company or a good ETF like the SPY, you should be in a very good spot. Now, here's a potential way that you can play it. Let's say you want to set a buy order either for the SPY or something that trades like the SPY. So here I am at Google Finance and I'm looking at the 5-year chart, and this is the SPY, the S&P 500. It's showing it's right at about 576. Well, what you can do if you want to compare it to something that is a lower price, let's look at VTI. It's the Vanguard Total Index Fund. And as you can see, it trades lockstep with the SPY, but it is less expensive. It's only right now, about half price. It's about $284. And what you can do is once you decide at what level you're comfortable starting to buy into the SPY, let's say it's at 550, you could apply that same thought process to the Vanguard Total Fund. And then what you would do is you would go ahead and look at right here when it looks like when it was at 540, Vanguard was at around 266. So you could set your buy order, let's say for Vanguard at around 266, and then pick up some shares that in time should do really well for you. I want you to all do me a favor because we have a lot of community members that enjoy watching the videos and they want to know what everyone is trading. Would you just drop a note in the comment section and let everybody know at this point in time, what potential plays are you looking at? When you get the feeling that they're as low as they can go, what are the stocks that you personally want to trade? I'd love to hear myself. Thank you. Remember, if you're with Trading with Ashley, there is no trader left behind. Now, the other day, I did a video that many found very helpful on how to properly hedge your portfolio. Obviously, it's best done when the markets are riding high, but this is the perfect time to learn. Go ahead and watch that video right here.